Hello, everyone. Welcome back to Sipping Wealth Live. Hey, everyone. I'm happy to be here. Um, I am back every Tuesday at 6 p.m. Um, bringing you news, tips, and tricks on how to wealth up. So today I will be going over audits, tax audits, how to prevent them, how to stay out of the IRS's hairs, strategies on how to prepare for an audit if you do have one, or if you're under audit, or if you're like, ooh, um, I know there's a lot of nervous energy surrounding audits. So I want to make sure I go live today talking about audits. So IRS tax audits. So if y'all do have questions, make sure that you drop it in the comment section. Also, for those of you that are tuned in with me, drop a comment in the comment section. Say, hey girl, something. So I know who is tuned in with me. But yes, I'm going to go ahead and jump right in. And also make sure that you subscribe to the YouTube channel, Sipping Wealth, and make sure you turn on the notification bell so that you don't miss out on any Sipping Wealth lives. All right, let's go ahead and get in. So I'm going to go over the likelihood of getting audited, and then also strategies on how to reduce the likelihood of you actually getting audited. So you preventing an audit. Is it 100% preventable? Like you will never get audited. You do everything right. The odds are very slim that you will ever have to go through an audit, but is it still possible? Yes. So some audits are at random, but a lot of them are because there is some kind of like red flag alert. Like maybe you took a huge deduction and the IRS is like, hold on, let me see what's going on. Or maybe your business has been in a negative for 10 years. You've been filing losses on your business. And the IRS want to see if this is legit or if you're just running a hobby. All right, I'm going to go ahead and get in there. And make sure that you hit that share button as well, y'all, so that, we'll help our family, friends, and loved ones, all that good stuff, wealth up with us, right? Okay. All right. So for starters, I'm going to go over, like I said, some ways on how to prevent or decrease the likelihood of you actually getting audited. All right. So the first is accurate reporting. So making sure that everything you send to the IRS is actually correct and it matches what was already sent to the IRS. So this is another reason why you don't want to use the last pay stub when filing your tax return, because your last pay stub is not going to have the exact numbers that your W-2 is going to have. So when you send that number over to the IRS, they're like, ooh, red flag. This is not the numbers that we have. We have this. Okay, let's go ahead and figure out, what else is going on with the tax return. And we're going to need more information, all that good stuff. So you do want to make sure that you are submitting accurate information and it matches the 1099s that was sent to the IRS, the W-2s that was sent to the IRS. Because if it doesn't match up and you put some other information on your tax return, it will go ahead and get kicked back. They will go ahead and send an audit or tell you, hey, there's a discrepancy. We need to dig into it further. So you do want to make sure it matches up. Accurate. Also, you do a lot of times when you sign off on your tax return, you are telling the IRS, I looked at everything on my tax return. Everything on my tax return is accurate. Everything that I reported on my tax return is accurate and to the best of my knowledge. So that's what you're claiming. All right. The other is avoiding extra high deductions, because this could be a huge red flag. So if, for example, if you're doing a mileage deduction, or let's do this, maybe you're doing health expenses and you're like, I want to do an itemized deduction. And you said, I had $60,000 worth of medical expenses that previous year. That can trigger an audit. Not to say that if you legitimately had $60,000 worth of medical expenses for you not to claim it, But if you do, they're going to want to see those $60,000 worth of medical bills. Okay. So it's to support the claims that you're making, that you actually have that. A lot of these people that have self-employment income, 1099 income, contractor income, gig work, freelance work, things like that. If you put, hey, I drove 80,000 miles on my vehicle for my business last year, and you put that on your tax return, and the IRS want to see a report of all the trips that you made that equated to 80,000 miles. Okay. They want to see that report. So I tell my business owners, make sure you have that mileage tracker on, so that if this comes up, not to say, hey, if you actually legitimately drove that 80,000 miles and you tracked it, beautiful. Because all you need to do is download that report, send it to the IRS, bop, 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 case closed, okay? Because you actually have the proof to substantiate your claims. But if you drove 80,000 miles and baby, you didn't track any of the mileage, and they come back and say, hey, we want the proof for your vehicle deduction that you put on here, then you need to be able to provide that proof. If you don't have it, then they're going to tell you, hey, you need to pay the taxes that you would have paid if you didn't have this deduction on your tax return. So they're going to say, all right, we're going to make it as if that $80,000 miles deduction wasn't on her tax return or his or her tax return. And we're going to base their income on that amount. And we're going to tax that. So you do want to make sure that you are avoiding those extra high deductions, especially if you do not have the information, the records to substantiate those claims. Okay. Yeah, you're writing off $100,000 worth of inventory. You better have the receipts and everything to back that up, because that can go ahead and trigger a red flag and they can audit. And they're more likely to audit because of that. All right. Next thing is to report all income. This is absolutely so important to do this. A lot of people that come to me and they're like, hey, I got a letter in the mail from the IRS. I love this because people really don't read the letters from the IRS. They just immediately freak out and they come to my office and they're like, the IRS wrote me something. I don't know what it is, and then we read it and it's like, oh, well, you had an extra 1099 and you didn't report on your tax return. Oh, okay. And then we do an amendment. We add that 1099 in there and we send it out back to the IRS. Now, back to what I was saying, making sure that you report all income, because if you did freelance work, maybe you had investment capital gains from your investment accounts, maybe you were stacking up, you got a bunch of interest payments, things like that, and you don't report that to the IRS, what ends up happening is they send you a letter saying, hey, you have an extra $50,000 worth of income, and we estimate your taxes that you owe on that income to be $15,000. So you owe us $15,000 plus interest and penalty on that amount. Now in total, you owe us 16 grand. And then people receive that letter and they're like, oh my gosh, I owe $16,000. Well, yeah, because you didn't report that income. Now the IRS put some numbers together and they came up with a number for you based on that income that you didn't report on your tax return. So if you're like, yo, okay, my fault, and you accept that, then, you just pay the money and move on. But if you actually want to go do an amendment, put that form in, maybe you had expenses associated with that 1099 income, or whatever the case may be, then you do an amendment, put that income in there, put whatever else needs to be in that, and then resend it to the IRS so that they have the more accurate return. Okay. But make sure that you are reporting all income, because it will lead to an audit. Okay. A lot of times it does lead to an audit. Let me not use the definite will, because some people skate through and then years later it stacks up and they're like, you owe us for 10 years. No. All right. Use round numbers sparingly. So a lot of times they'll say, oh, I spent 20,000 on supplies, 10,000 on repairs for my thing, but $5,000 on advertising. So all these round numbers, that looks suspicious. Okay. All these even numbers, 5,000 here, 10,000 here, 20,000 here. You want to stop using those round numbers and use them more sparingly. If that's because those round numbers, that's exactly what it looked like. It looked like you're just guessing. Hey, Keandre. Hey, girl. Thank you for tuning in. Hey. So when you use those round numbers like that, like 20,000, 10,000, and that's all you're putting on your return, they're like, hold on, this person is guessing. Ain't no way they had 20,000 here, 10,000 here, 5,000 here, 7,000 here. They don't have any 7,291. Like, these numbers seem oddly round. Then that's red flag. Like, that's suspicious. Okay. So now they want to dig in deeper and see, all right, we're going to see if what they're reporting is actually true, and then they're going to start asking for more support to those claims. So you want to make sure that you're actually providing accurate, like precise numbers. So if you spent $2,081 on advertising, do not say I spent $2,000 on advertising, because $2,000 on advertising looks like a round number when in actuality you spent $2,081. All right. You want to make sure that you're using those round numbers sparingly. And you're giving a more accurate amount when you're giving those numbers. Hey. Okay. Another is being cautious with your business expenses. My business owners, my self-employed people in these Schedule C's and LLC and all this, stacking up these expenses out the wazoo. Like, I saw a return and it was like negative 100K. And it was just like negative 100K. And you generated $15,000 in income that year. And you wrote off $115,000 worth of expenses. Come on, let's be for real. And you think like the IRS is not gonna say, hey, let's look into that. Like this is just getting crazy out here. So my business people, gig work, 1099, people with the Schedule C's, calm down with all those expenses. Calm down, okay? You want to make sure that you actually have these expenses, business expenses that are going through your business. It's okay to say, hey, I use 50% of my phone for business and I use 50% personal. My phone bill is $300 a month. So $150 a month is allocated to my business. Okay, yeah, because you use your business for personal and business. But for you to say, oh, my phone bill is $500 because we got the family plan, the whole family's on the plan, $500 a month for the whole year. Now I'm writing up, it's just like, yeah, come on, y'all. It's not giving. All right. So we want to make sure that you're actually giving legitimate, necessary business expenses. So if you are online based business, you're in e-commerce. You're an e-commerce brand. You put on your tax return, you're an e-commerce brand, and you're writing off $10,000 worth of meals and entertainment. You're writing off $50,000 worth of, 50,000 miles for the year, but you're an internet company, an internet-based company. So you want to make sure that these expenses make sense. And then especially for your industry, because if you're in the healthcare space and you're in the healthcare space and you I don't know, some odd expense, and you have $100,000 in meals expense, or you're like, hey, I had to purchase things that doesn't really relate to your business model, then it does raise a red flag. Okay. Next one is avoiding cryptocurrency missteps. So with cryptocurrency, you want to make sure that you're actually reporting them accurate on your tax return, because this has been a huge area. And the IRS has been like actually increasing surveillance and everything when it comes to cryptocurrency, managing cryptocurrency. So and making sure that people are in compliance and actually reporting them. So you do want to make sure that you are reporting your cryptocurrency transactions. Um, if you are purchasing things with your coins, your virtual currencies, if you're using that as like a checking account, things like that, you are realizing those gains. So that does make a taxable event, and that is considered income. So you do want to make sure you are reporting that stuff. All right. Next thing I want to touch on is making sure that you're staying informed. I say this all the time, basically at this time at this point weekly. Okay, making sure that you are staying informed with these tax laws, things like that. Will you know everything? No, the tax laws just keep getting longer and longer. Okay, but making sure that you tune into things like this. Look at, maybe follow particular the IRS page, things like that, just so that you're aware of things that come out. Even if you need to talk to your tax accountant, as strategic tax accountants, even if you need to reach out to us and say, hey, I saw this video. Is this something I should be looking out for? Hey, I saw this video about S Corps and they said I needed an S Corp. I get this all the time. They said, oh, my business, I should convert my business into an S Corp. All right, I watched this video. Okay, now this is something that, all right, is in the top of your head. It gives you something to ask your tax accountant, ask me. So, but I would make sure that, hey, I'm actually advising you properly based on your particular situation. But all in all, you do want to make sure that you're up to date. You're looking at different tax laws and things like that that may affect you and in your industry if you're in business. The other thing is make sure that you are filing electronically and on time. So if you're filing an old year, maybe you're filing a 2016 tax return or a 2018 tax return, they do stop accepting electronic filing after a certain time for older tax returns. But if you're filing a more recent tax return, 2022, 2023, things like that, you do want to make sure that it is electronically filed. Unless there is something like, unless you're making an amendment or something's wrong where you provide driver's license and information to support your dependents, things like that. But just know that when you paper submit your tax return, it will be under a more scrutiny. One, it will take longer to process and it will go under more scrutiny because they want to make sure that there are no errors and things like that. So electronically file your tax return and make sure you file on time. Filing on time is making sure that, hey, like everything's in the system, the IRS is following through. When you file your tax return late, it does give the IRS more time to say, oh, they took their time. We're going to take our time processing this tax return and we're going to make sure we look at every detail, essentially. So it does go under more scrutiny when you do late filings, when you paper file, things like that. It does attract more likely chances of you getting an audit. Okay. And make sure y'all seek professional help from a knowledgeable source. Okay. Speaking for myself, I am an enrolled agent, an IRS licensed enrolled agent. Okay. I am licensed by the Internal Revenue Service. And I've been in the industry profession for 13 years now, going on 14 years of experience in the industry. I've been in my business for 6 years. I have years, knowledge, licenses. I am held to a different standard just because of the license that I hold. So making sure that, hey, the professional that you're going to has that sort of backing where you know that, hey, they've been in the industry for a while. They didn't just learn what they know from H&R Block last year, and I have them doing a complex S Corp return, or I have 5 investment properties and I'm going to give it to a tax professional that just got their P10 number the other day. Okay, yeah, you want to make sure that you're going to somebody that's knowledgeable, that knows what they're doing, because it's going to minimize errors and the likely chance of getting an audit, because a lot of times there are things that are missed. I see a lot of times with people's S corp tax returns, partnership tax returns, business returns, where their old professional didn't even count bases, they didn't do particular things. These are important when you have those type of entities, when you have business tax returns. Okay, it is a different ball game than saying that you have a 1099 gig work and you're just paying self-employment tax and income tax on that money, versus saying, hey, I got a partnership, hey, I got an S corp, I have a corporation. All right. Yep. Next, I'm gonna go over the if you're in an audit, how to prepare. Okay, if you're in an audit, you're like, oh shoot, the IRS is auditing me. Or if you are not in an audit and you just want to make sure that you know what the heck to do if this even comes up. Okay, so we want to make sure you are prepared. All right, the first thing is to make sure you are organized. As soon as you get that letter, or even before then, when you submit that information to your tax professional, you want to make sure you have all your relevant information, your receipts, bank statements, invoices, your original tax return, amended return if you did an amendment. You want to make sure you have everything in a file. I tell my clients, I give my clients access to their portal all year long. I tell them, if you have a document or receipt, whatever the case may be, that comes in throughout the year, go in your portal, go in your client portal, drop it in there. You don't have to wait until tax time to say, oh, I'm trying to gather my documents. Go ahead and drop it in our portal. Drop it in there. Create a folder within your client portal in our system, and just start dumping your stuff in there, because it's going to allow you to. It's going to help you with being more organized. And if something comes up where the IRS is like, oh, hey, we need proof for this, you already have it in our folder. In fact, we won't even have to bother you. We'll be like, hey, oh, they sent you a letter. Oh, we have the records. We're going to go ahead and send it off. And it's done. Case closed. That's the beauty of making sure that you are organized with your records, especially if you are claiming expenses and things like that on your tax return. Keep that stuff in a folder. Create a Google Drive, okay? I tell people that don't want to do like get a QuickBooks, and they're like, oh, I don't know if I need QuickBooks right now. You can literally open your Google Drive app on your phone, take a picture of the receipt or whatever, and then forget about it and leave it in that Google Drive. You do not have to look at that receipt ever again. You don't have to keep the receipt. You don't have to keep a shoebox, a trash bag full of receipts. Okay, you can literally take the picture, put it in the Google Drive, and forget about it unless it comes up. Hey, Rodney. Hey. Oh, you live. My bad. Yes, I'm live. Yes. So yeah, make sure that you have these records, y'all. If you're gonna say that you spent $30,524 on supplies, you better, and from Amazon, you need to make sure you have all the Amazon records and receipts in a file. Okay, I'm just using an example, but just keep your records, y'all. Keep an organized record to support those claims. This is huge, like especially for my business owners. All right, review your tax return. One thing that we make sure that we do at STA is whenever I file my clients' returns, we actually sit there on Zoom, on video chat, and go through the tax return. And a lot of the times when you're the tax preparers are preparing the return, they prepare it, you sign it, it goes on this merry way, and you don't even know what just happened. And you're like, okay, what's my refund? What's the amount I owe? And you didn't know that there was a E missing in your name, or you didn't know that, oh, they put an extra zero and like a category and it wasn't supposed to be there because you didn't actually sit there and review. But when you're signing off on that return, you told the IRS you reviewed it, you stand beside it, you stand on business on this return. That's what you told the IRS. And then when it comes back, now you're like, oh no, it was the tax preparer that did that. I didn't know they did that. Well, you didn't review the tax return. So you do want to make sure you are reviewing the tax return for any discrepancies. You want to look at it, take a look to the best of it. If you don't understand something, ask questions. Don't just race through these tax returns, especially if you have a business. Make sure that you're actually looking at the stuff. Ask questions, y'all. If you don't understand it, if you are like, hey, what's that number? Or why is that number on that line item? Ask questions. Because ultimately the fault falls on you. Okay. Because you are the taxpayer. You are the taxpayer, and you said that when you signed off on the return, that this is all your information and you stand beside it. The next is to understand essentially like the audit process. So how the audit process essentially goes, the IRS sends you a letter. Depending on your CP number, whatever the letter number on the letter is the type of audit that you're going through. So it can be various things. It could be they're trying to verify your identity. It could be, hey, you made a claim, you claimed a dependent, but somebody else have the same dependent. It could be an expense. You claim that expense on your tax return. They want to see the proof. So depending on the particular audit thing that they're auditing, they'll have a code associated with it. And they will actually provide you with the information for what they need for that particular audit. If you don't do anything about it, if you don't respond to the letter, do anything, they're going to essentially say that, okay, you agree with what we put in the letter. You agree with whatever we put in the letter, and we're going to go ahead and push it through. So, for example, if they're auditing an expense that you put on your tax return, and they say, hey, we want you to provide proof of the $20,000 in marketing that you spent. All right. And you don't do anything about it. They're going to say, okay, they didn't actually have that $20,000 in marketing. We're going to take that off and we're going to actually issue them a tax bill as if the $20,000 in advertising expense wasn't on there. And then you're just going to go and pay that amount and case closed for them. And that's if you do nothing. Or if you send a letter and say, hey, you're right. Whatever you have in the letter is correct. Well, you don't have to send anything. They will just you could just leave it. If everything is okay, you could sign, leave it or sign off on it and say, okay, everything's cool. Now, if anything's wrong with it and you want to actually fight it, you do have to make sure that you respond. A lot of the times they only give you 30 days to respond with whatever proof they need, whatever they need. So within those 30 days, you need to make sure that information is mailed, faxed, whatever to the IRS, or they're going to go ahead and proceed with whatever they said in the letter. Okay? Now, it's 30 days. Do not wait until day 25 and call STA and say, hey, Wadleen, I got a letter from the IRS. I need you to look at it, and we got to do something about it. And you only have 3 days to respond. Okay. Just know you may or may not be able to actually get that pushed through. Is there a way where you can go and file an appeal and do the whole shebang? Yes. Will it cost you? Yes. Okay. All right. But make sure that you respond within that time period. Respond as quick as possible. As soon as you receive a letter from the IRS, open it. Open it immediately. Okay. Do not sit on it because you're fearful of what's inside of it. Another thing is be honest, be transparent. Make sure that when you're speaking, if you're in front of the agent, a lot of them they're nice as far as the auditors when they come in. A lot of them are pretty nice. Every now and then you get one that's not as welcoming, but they're here to assist you and help you through the audit process. All they want is for you to provide the information what they need. They want to get on with their day as much as you want to get on with yours. Okay, so the quicker you provide them with the information they need, they will get out of your hair and move on with their lives. Okay, so and that's how you essentially treat these interactions. They want to get what they need so they can move this along, and then you want to be able to provide them what they need. That's why when I say, hey, make sure your records, hey, thank you for coming in. When I say, hey, you want to make sure that you have your records ready and in a folder, it is as easy as sending that information over to the auditor and then them saying, okay, cool, thank you. Or me saying, hey, auditor, my client just received a letter. I'm going to need an extension for an additional da da da. A lot of times, they'll work with me, and I could go to the defense of my clients and say, hey, my client just hired me and brought me on to represent them. We need this amount of time, whatever the case may be. But they will still cap it and only give you a certain amount of days, especially if it's to report a particular information on a claim, on an expense that you did. Okay, so just making sure that you have that stuff ready and you just make it available. Understanding the deductions and credits that you're putting on your tax return. People just don't know what's on their return. They're just like, okay, I gotta, how much, what is my refund? Because I don't care about any of the other stuff. But you want to actually understand what's on your tax return. I have people claiming energy credits that they didn't even qualify for, and they come to me and they're like, oh, I didn't know that was on my tax return. Well, you signed off and told the IRS you did. But I had a client last year. They came to me and they're like, hey, I received $21,000 from the IRS, and I'm rounding up. I received $21,000 from the IRS. The woman charged $8,000 for the return and everything, but I feel off about it. Like I feel like something's wrong. I'm like, hey, let me take a look at it. Long and behold, there was a credit on there that wasn't supposed to be on there. It was just like, it was a mess. But you do want to make sure that, what's on your tax return is supposed to be on the tax return. Someone else came and they're like, hey, they're saying that I have this business, but I never had a business. And it was like an S corp. They put a Schedule E as in K1 on their return for an S corp that they didn't own, that doesn't even exist. They put on their tax return to lower their tax liability, but the business doesn't even exist as an S corp. So, making sure that, hey, you're speaking to the right people, you have trustworthy tax professionals. It's crazy out here. But yes, making this is things that you can utilize and kind of make sure that you keep on the top of your head to make sure, hey, if an audit or something like this comes my way, or I received a letter from the IRS, then I know how to move forward. Okay. Stay organized throughout the entire process, and make sure that you are polite. Do not get an attitude. Do not get testy with them people, because they will not work with you. They won't. But you want to make sure that you remain calm, you remain pleasant, and you're cooperative throughout the entire process. All right, y'all. Hopefully that was helpful. I gave y'all like 20 tips on how to prevent and strategize throughout these tax audits. So if you did miss any of this, make sure that you watch the rewatch. You comment, you share this with your followers, your friends, all that good stuff, and you make sure that you like and subscribe to the Sipping Wealth YouTube channel. All right, y'all. And next week, I will be going over state versus federal taxes. So understanding the difference between state and federal taxes. In the state of Florida, lucky us, whoop, whoop, we don't have state taxes. But in a lot of other states, they do. Understand the difference. But if you are a corporation and certain entity types, there can be a state amount due to the state as well. And I will go over that and everything next week. So you can make sure that you are tuned in next Tuesday at 6 p.m. Thank you for tuning in to another episode of Sipping Wealth Live, where I bring you news, tips, and tricks on how to wealth up. Have a great evening, y'all.